Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day. I've been sitting in this waiting room, and I've been waiting on my friends. Yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are. Yes, I wonder where my friends have gone.
Where'd they go?
Tell me, where could they be while I'm waiting on this conference call?
I don't know.
Well, I'm holding on my phone. Yes, I'm holding on the line. Hey, I don't know where they are. I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day. I've been sitting in this waiting room, and I've been waiting on my friends. Yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are.
That's some good music. So, okay, let's get to it. So, seriously, you're here. It's a Friday. It's 75 degrees in Chicago. So, probably in your area, it's nice as well. You're seriously here to learn about mortgage rates? Let me know if you're a buyer, homeowner, realtor, or broker, because I don't really want to know why you're here on a Friday. But since you're here, let's get over to today's news. Okay, here's what we want to talk about. If you're watching this video, you're one of the four that I just talked to. What happened this week? And is it going to continue? Where are rates going to go from here? That's probably why you're here. You're trying to figure out what's going on with those and the whys behind it. Let's dive into today's data. And then when we come back, I'm going to kind of answer some questions that you guys have and then give you the direction of whatever data we can find to give you a direction on where rates are going. So let's get over to it. If you guys got any questions, if you come in, let me know what you are. Are you a person looking to buy? I'll give you some direction there. If you're looking to refinance, got some great tools from you. And again, if you're a realtor or a loan officer, thanks for joining today. So let's get over to it, folks. Happy Friday, and God bless you for being here. Here's what's happening in the race today. Absolutely nothing. But here's the diversion we had yesterday. Okay, so do you remember Silicon Valley Bank? It was like 2 years ago. And that was supposed to be the cracking of the banking system, and everything's going to go terrible. Banking system, and everything's just going to go crazy. Well, that's kind of what Jamie Dimon insinuated yesterday. He said the auto loans are going really bad. So we're having some problems with it, and probably everybody else is too. Well, that kind of blew up in the markets, and that really caused the markets to have some drama. This is what we came out with this morning. Latest bank turmoil turns spotlights into new lending. But then Moody's came out today and said, okay, just hold on. This isn't nothing like we've seen in the past. So just one quick blip from Rick Santelli. He made this comment. A lot of this data you're seeing right now, he said, it's not even like somebody slamming the door when it compares to an earthquake. You know, when the Great Recession, that was an earthquake. A lot of these things that we have are basically just like somebody slamming the door. So don't fret. The markets are going to recover, and they actually recovered pretty darn quick. So now what's going to go on with rates? Well, you've been seeing me focus in on the 10-year Treasury. And the reason being is there's no data to help the mortgage market. So we have to just focus in on what people are doing with the 10-year Treasury, why, and then we'll kind of take that direction. So let me get over to some things that help you understand this market. So this is what happened yesterday, what really caused rates to come down. Nobody thought that we would have a federal surplus like forever. So yesterday, because of the tariffs and a lot of other things that are happening, and you might not agree with them or not, but they're actually helping our national debt. It's still skyrocketing, but this is helping quite a bit. So yesterday, the bond market was looking at it, and they're saying, okay, the job market's pretty bad, and I'm going to show you some details on that in a second. Then we have the debt. What's going to go on with that? This could help, but remember, folks, we also had that tariff thing that, are they still going to be legal? But the data we had yesterday was like, okay, a lot of this stuff seems to be working. Now, you might disagree with me. You can if you want down there. But so far, here's what's happening in the market today. Yesterday, we had that huge rally. And I said down through here, the 10-year Treasury, if this closes below 3.99, which we did yesterday, you'd see a rally into the market. Well, because of really no additional news, the markets are skittish. Then you have news about the banking system and everything else. But we did have some good news today. Let's get over to one report I want to show you. There was some digging into the jobs numbers. And the reason why we go into the jobs numbers is because the Federal Reserve, they're like, okay, we know inflation's going to tick up a little bit because of tariffs and some other things. We're going to watch the deficit, but the big thing we want to really watch is the jobs reports. So Steve Leisman over at CNBC, they comprise some data to kind of give us a look into the jobs reports. Let's see if it looks bad or not. So this is going to conclude our week on where the economic data is. And then when we come back, we're going to look at how this is affecting the markets today. And then what economic news we have next week that'll be shaking up the market like we're probably going to see next week. But hold on a second. Let's get over to see where these jobs numbers are looking like. Oh, hold on a second, folks. Was that hold music like crazy loud? I had to turn down my volume because I couldn't hear myself think with that hold music. So let's get over to Steve Leisman. Forgot, folks, you can't hear my audio in this system. We just got a new system and I didn't sync it yet. So basically what they said is they came out and said, okay, the jobs numbers that would have been presented today, and they aren't so bad. But the bad news that I read into it, continued jobless claims climbed. But they said it's nothing to really worry about. So pay attention to where the jobs numbers are really going. And we'll try to dive into the data that we get next week because this week was kind of a blank. So that's what's happening there. If you go over to here, I just posted a blog. And these are the things I'm going to start posting for you on Mondays and Fridays. I try doing it each day to kind of give you a market analysis. We will be creating a newsletter that you can subscribe to. But you can go down through here and it kind of gives you kind of recaps of the week, where rates are today, gives you a highlight of one of the most recent videos we did, some of the economic news that we should have gotten. And this could be found on my website. So go to therateupdate.com and just hit, let's go to resources right through here. So at therateupdate.com, just go over to resources, click it, and down in the blog section, you're going to find blogs. I'm trying to post as much data in here as I can, folks. So just click onto these, link this to your systems or whatever you need to do. I'll be blogging when I think you're going to need some data. So let's go back to this. The Federal Reserve, they have a surplus, but it still doesn't mean that there is the national deficit is going nowhere. So here's what's going on in the bond market right now. The 10-year Treasury, it's up, it's down, it's all over the map. But the 10-year Treasury closed 3.99 yesterday, but the markets didn't rally. But the good news is it didn't really, nothing really took off in one way or another in each direction. So this is the data that the Federal Reserve monitors. So the PCE, we were supposed to get inflation numbers this week on the producer side and consumer side. Didn't get it. That would have filled in big gaps here. Steve Leisman's report came in today and they said that the unemployment rate isn't really going to move on all the data. Now they had all the data from all the states except 3. So they're like, our numbers should be pretty darn accurate. And the GDP continues to climb. So that's basically what we saw this week. All we're going to do, let me just tell this in a nutshell, and then I'm going to go answer some questions, and then we'll get back to this on what I think is going to happen next week. So if you've got any questions, feel free to jump in and let me know. Man, you're a lot of ones today. So thank you so much. I know I'm a little orange today. We got new lightings. I got a whole new computer system we're setting up this weekend. So I apologize if I look red or orange. It's just the lighting behind here. So it's Friday. So thank you so much for Chicago 5416. Thank you. Thank you. Thank you. Thanks for being here. Oh, I know who you are. Thank you so much for being here. We just closed on your loan. Congratulations. And you did a fantastic job and you're a good steward of how we coached you through that whole process. So thanks for even joining after you close. The next question that we got. Afternoon, Dan. Hello, all. Have a great weekend, folks. Well, thank you. I appreciate you guys jumping in here. Let me know if, what I want you guys to let me know, and we'll start taking a poll here. Are these rates going to get to 5.99 before the end of the year? So I'm going to post a poll, but give me a thumbs up if you think it's going to happen this year, or a thumbs down. I'll give you my take here in just a little bit, but let's get some more questions that we have out here. So let's see what we got. What do we got here? I highly recommend Dan and his team are extremely professional and helped us through the whole process. It was so cool, your transaction. What I'll do is next week, I'll text you because we text back pretty much every day from when you started to when you closed. I'll text you next week. If you don't mind, maybe we can do a video. And I got a few testimonials coming out this week to show people how to use builder credits and things like that. I'm actually doing a VA testimonial next week as well. So if you wouldn't mind, I'll text you after this and try to schedule a testimonial next week. But thank you so much. Even closed and you're still here on a Friday. It's 75 degrees here in town. Go out and enjoy the day. So let's see what else we got. Refinancing. You are refinancing. I'll get to that in a second. Did you check yesterday's video? I did a refinance video. Check the live link. Just go up to, after we're done here, check the live link. It was about an hour long and we went through multiple scenarios. And I got a tool for you. Hold on a second. Let's go to my website, therateupdate.com. We'll get out of the blog section. If you're looking to refinance, before I forget, we just created a brand new, it's called RateWatch 2.0. So what this is it's for those homeowners out there. If you don't really know what rate to refinance, does it make sense? You watch yesterday's video, but here's a tool that allows you to put in your information on your mortgage, and then what rate would you be interested in possibly refinancing? So what'll happen is I'm going to monitor this. We don't sell the data or anything. I'll monitor it for you. And when rates get to where you wanted it to be, I'll send you out a video. What we're going to do is we're going to go over what your new payment would be, so what your savings would be from your old payment, how much it would cost you, because that's huge. A lot of people don't understand how much the cost involved in these. I might come back to you, some people, and say, you know what, the cost is so much, even though you're saving $200, let's wait for rates to go even down further, because I wouldn't spend $5,000 to refinance to save $200. So, that's what this system does. So fill it out. I'll track it for you. We don't sell the data, and don't be surprised one day. And if I call you or text you and say, hey, guess what? Your rate triggered. Let's go over the numbers. So that's for the refinancers out there. Let's get some more questions out there. So hopefully that tool helps you out. Owner looking to refinance, another one to 4.5 VA Earl. We just did, if you check out Wednesday's video, if you're new to this channel, let me explain to you. I have a slogan. I'm going to say, how do you compare over 30 different lenders with one application and one credit pool? Well, we show you that on Wednesdays, how we do it. So I'm licensed. I'm a mortgage guy. I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you. If you're looking to buy, build, refinance, if you're just looking into home equity loans, anything when it comes to residential mortgages, I'd love to help you. Investor loans, things like that. I've been doing this for over 35 years. Just go to my website right through here. You can actually call us. You schedule an appointment right through here, and you can even ask me a question right through here. So this past Wednesday, every Wednesday we come in and we show you guys how we do it. We have people come online and they give us their information, and we plug it in and we show you exactly who's got the best rate and the lowest fees at that time. And we break the whole thing down for you. So check out those videos. But if you want to reach me, just go to therateupdate.com, ask Dan. I'll be reaching right back out with you. Make sure you include your phone number if you want me to call you. If not, I'll email you. But thanks for joining today. Greatly appreciate it. Let's get to the next question that we have. It's China conversion. Okay. There's a lot of mix. My question is, as a home seller, I have a home that's been on the market for about 60 days. It's in Ormond Beach, Florida, and it's about 110,000 under what I appraised for. 20 showings. No, I'm not sure Ormond Beach is. Were you hit by all the hurricanes? I had a builder friend that was in south of Daytona Beach, but he was on the west coast of Florida. They were building and building, but because of the hurricanes, a lot of construction wasn't done. But I don't know. What you might want to do is reach out to me. We actually have a system. We can help you find a realtor. I don't know if it's the realtor issues you have. I don't know who did the analysis, how it's being listed. I don't know, but we do offer a service that, I'll have somebody from Remax reach out to you, and they'll kind of go through all the information you have. What they're doing is they're a representative of Remax, and then they're going to help place you with a solid person right there in that area. So we can do the vetting for you. You might I'm not sure, but 60 days isn't much, but not to have any showings. I'd like to know what your market looks like. Otherwise, how many houses are for sale and so forth. So if you need some help with that, just reach out to us. You got everything on the system right here as you're seeing it. Let's see. They better be legal. I get what you're saying. So what they were saying is, we were talking about tariffs. Here's my concern right now. Where is it? The stock market's doing well, but investors on the credit thing. It was yesterday's news. Got it. Is basically, it was right here. We have a surplus now. So what's happening is they're saying each month, are we in debt, or are we okay? Well, in the past month, they're like, okay. We're actually bringing in more than we're spending as a country right now. But the concern is, are tariffs going to be legal? So the Supreme Court hasn't seen that yet, or ruled on it. If they come out and say you can't do this, the president's probably going to jump a bunch of hurdles to figure out what to do next. But I don't know how we refund this money, because somebody busted me on it one day. I'm like, oh, just send the check back. I don't know how you refund the money, but all this money is going to have to be refunded somehow or taken away from us and put back to where it came from. That's going to huge impact on our national debt. And then this all blows up in our face. So how long is all of this going to last? That's the concern that we all have. Let me know if my audio is okay, folks, because I'm changing mics. And yesterday I did a live event, and it was, I don't know where the audio was coming from. It was coming from an external mic. So give me a thumbs up if my audio is good. If not, it appears to be good on my end, but just want to make sure you guys are hearing me okay. Let's see what else we got down here. Hey, really enjoyed. I'm going to blow up my screen because I'm having a tough time seeing this today. Yeah, I really enjoy your stream. Thank you so much. Even though I couldn't stay long, I'd love to support your journey and can connect you with a well-known Twitch broadcaster. I would love to do that. Here's what I'm trying to do right now. We're just trying to spread the word, folks. Yeah, yes, I'm a mortgage person. My whole goal, truly, and if you talk to anybody that knows me or you've been one of our clients, we just want you to be educated. Okay, we even have tools like this. Here, let's get over to this one. Back to our website. There's a bunch of things here. If you got a quote from another lender, and you want to check, are they on point? We can review that. Remember, I had the slogan, compare 30 plus lenders with one application, one credit pool. That's what we do right through here. So I'm not trying to steal business from any other loan officers. So if you're here, folks, I greatly appreciate it. I hope you learned something. And I'm not trying to steal business from you. I just left a bank. They were just hosing them. So if you were getting a VA loan, they would price your loan. The rates were really high and the bank was making a ton of money. Then you're charging you a whole bunch of points. And I'm like, I can't do this. So my goal has always been, make sure you're being taken care of. So hopefully with my education, you can figure that out. So here's my point. How can you compare the rate quote you got with, to see if there's anything else out there better? Go to the loan estimate review right through here and just upload your loan estimate. Okay, so if we can beat them on the rate and the fees pretty substantially, I would hope to win you as a client. But if I beat your lender by $500, stay with them, because I'm not here to take anybody's business. So didn't mean to go off on a tangent there, but if you guys have anybody you'd like to reach out to me, I would love to collaborate with people, especially if you're in this field and you have a bigger channel to help, tie some things together. Are you in real estate? Are you a loan officer? Are you a big realtor team that's looking for, just to educate your clients? I'd love to help you. So let's keep going, folks. I apologize. I'm not going to try to stay on one thing. I can't wait to get out of my 6.3 rate. Isn't all that bad. I bought when the rate was on its way down in August of 2024. The rate, you're good. But if you, again, go to the RateWatch tool, plug in the information. I need a thumbs up if you guys can hear me. Purdy, please. I'm just going to ask, if you don't. Lower price, if no offer. It's that simple. It's not that simple. There might be just something about your house nobody wants to tell you, but they should. Just come out and say, okay, this is really screwing it up, or this looks terrible. And not to hurt your feelings, but sometimes you want money or you want your feelings to be, okay. You're wanting the money. If your feelings get hurt because they don't like the paint or something like that, don't worry about it. Do what they're telling you to get the most bang for your buck. I'm 60 years old. Heed my advice. Okay, so what the next thing? No budging till rates hit 4.5. Well, just put it in the RateWatch and they might just, we were doing a video. You guys, you have to check out, sorry if it's squeaking. You guys have to check out Wednesday's live stream. It was me and Alan. So we come on and we go over, basically we show you how we do that, compare 30 different lenders. And we're going through, and it was amazing how many people's rates came up with like 599. And I'm like, what's the buy downs? And he's like, no, that's no points. No, actually some of those were giving back like $400 or $500. And I was like, you got to be shitting me. I got to do a video saying, okay, that's $599. Then we have rates coming down even more. So pay attention. But here's what I'll just advise you to do. If you're at 7.5, I see a lot of these rate watches come through and people are, I'm waiting for 5. 5? Really? Well, one thing that holds most people back, and I'll get to the next question here in a second. The one thing that holds most people back is how much am I, they just don't know. How much of my savings, and your costs probably aren't as much as you think they're going to be. Okay, so most times when you refinance once or twice in your whole life. So you don't understand, the cost. When you bought the house, the costs are terrible. Like I did an analysis on my home, and it's a decent size home. The title fees would have been $10,000 to $12,000 if I was buying it. Refinancing, it's $995. That's how, well, I just had a light pop on. So if something else we got lights going on all over the place. That's how much it is. So a lot of people, their reluctancy is, I'm not going to spend another $5,000, $10,000 to refinance. Shit, I wouldn't either. Okay, so our goal here is, trust me, when you work with us and me, I'm probably as cheap as you are when it comes to paying fees. I don't want to pay fees. So, okay, let's get going. Sorry, I'm going off on a tangent. Hey, Dan, thanks for lots and lots of education and information you provided. You are more than welcome. And if we could help more and more people, please share my videos. And hopefully I'm not a pushy salesman. I just want, you to be educated. I get my videos reviewed. And the problem they say I have most of the time, because our channel isn't growing as fast as they're like, how are you not growing? They're like, you don't have a call to action. Like you don't tell people what you do, how you do things. So I'm trying, folks. But thanks for joining us, and thanks for watching. Will rates skyrocket after cuts like here's my, I don't know. I don't think, but here's my concern. You asked, I'm going to give it to you. Rates are down. These are as low as they've been over the last year. Now we hit 6.2 last September, and then the September before that, and that was the bottoms. Why? Don't really know. It's not me, it's the whole markets. One day it's up, one day it's down. So what we were looking at is saying, okay, my situation now is I'm just advising you. Hopefully I'm not FOMOing or anything. Just letting you know, these could go up fast. They can keep going down. Yeah, they could. But like Rick Santelli, if you watch my video from this morning, I did a video where he's the bond guy. He's on Wall Street. He's in Chicago. He's at the mercantile, bond traders and all that. He's in the pits. He's like, well, when the government opens and the data starts flushing in, it might not be as bad as we think. And the Federal Reserve might cut, but they might not be as aggressive. And then the long end of the bond, especially if tariffs are deemed illegal, it's not going to be good. Okay, so not trying to scare you, just be prepared. So put in your information in the RateWatch tool. When the rate hits where you want it to be, or be reasonable. If you're at 8, you don't want 5. 6.5 would be great. So that's it. Next question. Dan, I have some questions, if you don't mind. You betcha. You start asking them, okay? And you could even, if you want, click let me go back to my website so you guys can get this. If you want to ask me a question, you could pop up here. So if I'm out, the video's over, it's after hours, it's the weekends, just go to my website and click right there here. I'll get back with you, I promise. Let's see where you are. North of Daytona Beach. Well, I have a place in Cocoa Beach, and I'll give you what we have. I don't know if you have a house or a condo. I have a condo on the beach, and if your condo, if you can see the beach and you have a good view and everything, they're selling. If you're on the first floor, like in my complex, it's 5 floors. First floor really can't see the beach. Second floor, you can start seeing it. Then third floor, you're good and up. First floor, they go on the market. They just sit there. And it's just because people aren't looking to buy that. So I don't know yours, but on the East Coast, if you're in a condo, I mean, we all got pounded. So I don't know what kind of property you have, but yeah, if you'd love to reach out to me, just hit the Ask Dan button, and I'll get a request, and I promise you I'll reply. Or my email should be down below in the description as well. Man, do I look orange today? Okay, let's get to the next question we got. Audio is good. Thank you so much. Yesterday, I was editing after one of the live events, and I'm like, it sounded like I was in a tunnel with a bad radio. It was just bad. Sorry, folks. I try my best. I do all this. I do the research. I do the videoing. I do the editing. I create the thumbnails. I post it, and I do everything. So it's me truly. I don't have a staff involved to do this stuff, and then I work on loans. So it's a busy day. I have a conventional loan, 29 years left. Hold on, I'm having a tough time. 28 years left, 338,000. Mr. Cooper, lender 5.5 for refinance with an FHA, but it costs me 356,000 and 30K for. You save too much if you do. Company may offer me 5.6 for refinance FHA, but it cost me five 56,000. Send me your loan estimate. That doesn't make any. That's a lot. Yeah, I mean that this is where let's stop right here. This is where people get you. I'm going to go I'm going to do a quick little study here. Mortgage rates. I did this yesterday. Mortgage rates today. Hopefully I come up. Where was it? We can pull any of these. It was something down here. And there's a reason I'm doing this because, folks, what you have to realize, this is marketing. Let's just go. I don't know what it's going to take me to, but whatever. It's all the same. Okay, so let's go to this one. Here's what we're going to track. Hopefully, this will give you rates because every one of these they sell advertising. Watch my luck, there won't be. Nope, there isn't. Well, what I was getting at was yesterday's. Let me see if this one does it for us. I'm looking for one of those ones that'll give you all these lenders out there, then kind of rates you can get. Here we go. Let's see if this is a good one. This is not a good one. Okay, so here's what I want you to see. A lot of these, when they come up through here, they're going to say, okay, we can get you this or we can get you that. And they're going to show you this rate that's just crazy. Okay. And I did this in yesterday's video. You have to watch it. I'll try to link it down below. You had all these things and the rates were fantastic. And then I went in there and I'm like, okay, that rate represents this person. That person was buying a $450,000 home, putting 20% down. That's $90,000. They had a 780 credit score, which is the highest credit score tiers that exist now for mortgage rates. And it was a purchase of a single family. It was the ideal loan. Okay, the rate was 5.5. But on the side, it said fees. And the fees were like $8,000. And those were points. Those were fees to get that rate. So then I started manipulating those numbers and I'm like, okay, wonder if these people, they were only putting down 3% and they had a credit score of 680. What's their rate? I went through one and I put in, it was a 580 credit score, looking to put down 10% and all this. It should fit an FHA loan. It didn't even give them a rate. It said it doesn't even exist. Remember, all this stuff is advertising. So when you get stuff like this, especially from Mr. Cooper, a lot of those bigger companies, I left one, they just gouge you. So upload your loan estimate, go to the rateupdate.com, put your loan estimate in here, exactly what they sent you. Those are the ones that we really want to make sure you're not getting hosed, because most people, when you go directly to one of those big lenders, Mr. Cooper, Serve Bank, things like that, you'll get, all I'm saying is nothing against those companies. Just go to our website, make sure you upload your loan estimate. Just let's try to keep them in check. That's all I'm saying. Yes, I highly recommend. Dan, hey, who else is here today? Got 8% rate for different lenders, and he got me 6.5%. Well, thank you so much. I can't, for some reason, my backdrop today, I can't see a lot of the texting down below, but thank you so much. Chicago, that's you again. Thank you. Here, well, if you can't recuperate loan costs in 15 months, I wouldn't do it. Oh, recuperate. My apologies, recuperate. The text is really bad. I agree. If you can't, I'm looking at, here's the ones that I would suggest you doing. 6-7 months. You can recoup in 6-7 months, do it. We don't know where rates are going to go. And then during this process, if rates drop substantially, remember, I'm set up with over 30 lenders. So here's another trick that a lot of people don't realize. I work at a bank that gives me a license in all 50 states as well as Puerto Rico. But we're set up with over 30 lenders. So what we can do is, if I lock you in at one lender and the rates plummet, I'll go back to that lender and say, can we renegotiate? They say no. I'll just withdraw the loan, move you to another lender. That's why if you go directly to a lender, or directly to a Mr. Cooper, directly to a credit union, you're stuck. Once you lock in, you're locked and you're done. There's nothing you can do at that point. Let's get to the next one. The supply and prices cuts are everywhere, and the foreclosures are up too. I feel bad. Some of the people in Cali are trying to sell a rat box for 2022 prices. Where are you? I thought you were in Mary. I thought you were in Orlando or in Florida. Maybe that was the wrong person. It is. California is weird. You can go, it's like Chicago. You can go blocks away from areas and it's completely different. It's like a different world. The houses are selling here 3 blocks away. It's terrible. So there's school districts. There's all kind of, what's the amenities? What's the, what are the tax rates in those areas? Those are things you should be concerned about. That's why a lot of times what we tell people to do is when you're analyzing homes, make sure you look at everything. Like I'll coach you through it. When you're looking at a house, okay, you get wowed over the house. Look at the taxes. Look at the real estate taxes. How much are they? Are they substantially more than the house down the street? Some areas it's a specific percentage. Other areas, it might be something else or whatever. But how much are the taxes on that house? That's another area that you look at. But I agree with you. But in your area, the foreclosure piece is weird. There was an interview yesterday or an article saying foreclosures up 17%. I kind of debunked it because we went through it, and when you really look at it, 17% over the last, during COVID, basically, you couldn't foreclose. It was illegal. So now when you get a spike in foreclosures, you're most of the time you're starting from zero to a point. But if you go back in history, I mean, we're a fraction of where foreclosures were. Just look at where they were in 2006, 7, 8, 9. It was crazy. And that's what caused the market to do what it does. So again, folks, if you want to check out my blogs, we talk about these and other things. Go to the rate update, hit resources, blogs, right through here. It's going to be this show, other shows I have. I don't know. Mortgage rates refund. This might be the live event. Yeah, I think this is the live event we just did. Check that out. It was pretty cool. If I say so myself. Let's get back to the rates and the questions. My apologies. It's Friday and I'm in a good mood. Please check with Dan. He will educate you about the process. Thank you so much. Kudos. Chicago. I promise you, I'll text you as soon as we're done. You need to be my number one promoter, especially in the area. Offer was not from Mr. Cooper. Doesn't matter. Just shoot it over if you want. I'll take a review of it. Between Alan and myself, we're gonna do a video, personalized video back to you. We'll break it down. We'll say, okay, here's what they're offering you. Our assumption is they got you approved. We'll get you approved. Let me go down that aisle just real quick. If somebody else got you approved and they didn't do fraud, I should have no problems getting you approved. Here's why. If you're getting a conventional, an FHA, VA loan, we all use the same systems. Okay. What we do is let me walk you through that. How do we compare your loan with over 30 different lenders with one app and one credit report? Okay. So here's what we do. We have you fill out your application. You go over to the rateupdate.com. Here's our main website. I don't know why this says Fiverr up there, but you go in here and you put in your refinance. Okay, so I want to refinance. So I'm going to put in all my data. So what happens? Here's what happens with every lender that you deal with. The data comes through. We review it for accuracy. What needs to be edited or whatever. We pull your credit. We have to pull a hard credit to truly get an approval. Okay, you pull the credit. That credit is good for 40. If any other lenders pull your credit for the next 45 days, there's going to be no credit blemishes. You won't get hit anything. If you want to learn a little bit more about credit, go to creditscoresandmore.com. This is a credit website that I created years ago. It's pretty cool. A lot of the systems are free. So check it out. I mean, I think you're going to find some use into that. So you put in your information. We review it for accuracy. We pull your credits. And then we run your loan through DU and LP. DU is Fannie Mae. It doesn't matter if you know who they are or not. LP is Freddie Mac. So our system runs a dual process, and it tells us if they approved it or not. Each one side by side, and it gives us all the conditions that each one of them are requiring. We're usually going to go with the easiest one. So we click it. Your loan's approved. Okay, so now what we have to do is we have to validate it. So now we have the data, but that's why we ask you, we need your last pay stubs. We need your W-2s. We need your tax returns if you have investment properties or you're self-employed. We do self-employed loans too, and we even do DSCR loans. Those are for investors out there for those. And then that's when you go into underwrite and you get fully approved. We need bank statements and all that. So if you got something back in like 10 minutes and you didn't really do much, you're pre-qualified. That's good, but a lot of times you might have 20, 25, 30% chance it might not go through once you put in your information, because what you think like your income is might be a little bit different than the other lender or than the lenders do. So basically what I'm saying is if they approved you, I can approve you because we use the same systems. All right. So if they got you approved, all I'm looking for is what your credit score is. In the loan estimate, it'll give me all the other information that I need to figure that out for you. So let's get to the next one. Did I answer this one? But on the other hand, let's see, did I miss something? Offer was from a private lender. Let me see what you said here. My apologies. But on the other hand, Mr. Cooper, preferred lender, was offering 6.4 with no cost at all same loan amount. Just term. That's what I mean. So if one went up, and this is the trick they'll slam you through these. Sign this today. We got to have an appointment tomorrow. We got to get these closed in 15 days. They don't want you to realize what you're getting into, and that's why I don't get into that. Let's go back up to what your offer was, and these are the people that we're trying to keep in check. I forget what it was. It was a dramatic difference in that in those payments or in your balance. I can't find it. Bear with me. Was that it? Yeah, look at the difference. Loan's $338. It's going to $356. $28,000. Or what? $18,000? $18,000. Holy shit. So that's the cost. Yeah, you're paying points and all that stuff to get down to that rate. Well, that's why send us your information. You can even send me the Mr. Cooper one. What I don't want you guys going out there getting 20 of them and then send me all 20. Just we're here to keep people in check. So, check out those services if you like. We love when you do. And is there anything else out there? No. Okay. Let's go to my thoughts for next week, and then we will conclude and let you guys go enjoy the weekend. So next week, we're going to have the same of nothing, probably. The government at some point's got to open back up. But what they're looking at now, they're looking to pull data. They actually brought in a lot of employees, and they're hoping next week we can start getting the data. Here's what scares me. What's that data going to show? The last report they're going off was ADP's payroll number was dismal. And then the markets are now just trying to find some direction somewhere. I've been telling you guys this. Be careful in the markets. I think it's overpriced. So we're going to, in for a mild correction possibly. I don't trade. I invest. So I just put my money in and watch it. Some days it's bad. Some days it's good. But over time, I dollar cost average. If you want to learn, how to do that, how that works, join me on Stock Talk Tuesday. My whole goal is to train or teach somebody just really doesn't know. When you go to the stock market like this, you look at that and you're like, okay, great, it's 285 up. Doesn't do me any good because I didn't do it. I just teach you the basics on how to understand this and maybe start investing $50 a paycheck just to figure it out. I'm not a stockbroker. I'm not an analysis. Just use this to help you understand the markets and for entertainment purposes. I'm not licensed, so don't do what I do. I'll just show you kind of behind the scenes what we do. So that's just look at what we're going to follow next week is watch the 10-year Treasury. Let's go back to kind of conclude this because this is going to be the most accessible data that you have. All right. So watch the 10-year Treasury as this yield moves, mortgage rates are going to move accordingly. They might move a little more than this because there is a risk premium built into a lot of these things. So we closed last night under 4. We're not there again today. So we needed multiple closes to really have investors jumping into the market. I thought today would be a better day because of these scares. The global scare on the new banking thing and all that. Then Moody's came in and ruined that day for us, coming in and saying, no, it's not going to be that bad. And then that was squashed. But I think the stock market, I watch it all day long, every day and so forth. The people out there just, all they do is want to shock and awe you because they're, I kind of pulled the curtain back. And this is what my thoughts are. And I'll leave it at this. If you watch all these financial channels, you ever notice they're like, oh, here's a contributor and that's a contributor. A lot of them are, they pay to contribute, and a lot of them are just pitching their products. So they're always out there pumping their stocks and everything like that. So this this movement, when they shock and awe you, they're hoping you sell as a novice investor and then you buy back higher. So that's what their whole goals are. That's what folks, I'm 60 years old. I've been doing this a long time. I've been trading or in the stock market since I was in college. I would buy $10 worth of stock just to learn how it worked. And so be careful. That's all I'm going to say. So my expectations for next week, well, if you're a homeowner, make sure you put in or fill out the RateWatch 2.0 tool. To make sure that you catch the bottoms on interest rates and be realistic. If you already have a quote, upload the loan estimate review in here so we can review that for you with the 30 lenders. But watch the 10-year Treasury. There can be a tweet. I won't say on some other things that might get me in trouble. There might be a tweet or something else that just could completely change the direction of where things are going. So just protect yourself. Be careful. If you're looking to build, I would look at, I'm still saying qualify at 675. You might say, well, that's 0.5% higher than that. It can get there in like 2-3 days. I'm not saying it is, but just be careful. And then if you end up closing it, it's maybe at 599, you're going to be like, whoa, that payment's a lot less. But that'd be a more comfortable feeling than that payment's $500 more than I thought. So you'll probably thank me on that one. If you're a homeowner, just fill out the RateWatch 2.0 tool. Put that all in our lap. If you want to figure out what's going on each day, subscribe down over there. But if you need some help with any of this, please go to our website, ask Dan, request a consultation, give us a phone call, and please don't forget to subscribe down below over there. And so every time I post a video, you get an alert. So that's it for today, folks. Thanks for joining me. Go out and have a great Friday. Weather's fantastic here in Chicago. Hope it's the same in your area. I will be posting all weekend, a couple testimonials, things like that. So check those out. They're pretty cool. Other than that, I'll be back here Monday